In the stock market, nuclear war fighting, et cetera, we tend to trust the system when we shouldn't trust it. You have to understand how it actually works.
Jim Rickards, the widely respected former advisor to the CIA, Pentagon, and White House, has once again issued a grave warning about the state of the global economy, highlighting what he calls the most reliable sign of a recession. According to Rickards, the inverted yield curve, a phenomenon where short-term bond yields exceed those of long-term bonds, is an unmistakable red flag. This economic anomaly signals that investors are growing increasingly anxious about the near-term future, prompting them to park their funds in shorter-term bonds, thereby driving up their yields. Historically, this has been one of the clearest indicators of an impending recession, as seen in the lead-up to the 2008 financial crisis. Rickards explains that the yield curve inversion doesn't happen in isolation. It's a reflection of deeper underlying issues, such as faltering consumer confidence, tightening credit conditions, and declining economic activity. Compounding this situation is the ongoing wave of layoffs sweeping through the tech industry, which has traditionally been a cornerstone of economic growth and innovation. When companies like these begin to shed jobs en masse, it creates a ripple effect across the broader economy, further exacerbating fears of a downturn. But the warning signs don't stop there. Rickards, who famously predicted the 2008 crisis and other major global events, has a track record that demands attention. He now predicts that the 2024 presidential election could serve as the tipping point for a perfect storm of economic and social upheaval. In his view, the uncertainty surrounding the election, marked by divisive politics, potential market turbulence, and escalating social unrest, could lead to unprecedented consequences, including a 50% market crash, the collapse of the US dollar, and even the imposition of martial law to quell widespread riots. These predictions, though alarming, are based on a lifetime of analyzing geopolitical and financial risks. Rickards points to the increasing polarization in the United States as a key factor in this looming crisis. With President Biden stepping out of the race and the Democratic Party rallying behind Kamala Harris, Rickards believes the political establishment is determined to prevent a Trump victory at all costs. This uncertainty, combined with volatile market conditions, has set the stage for a potentially catastrophic chain of events. Rickards has even gone so far as to describe the upcoming election as a meltdown that will shake America to its core. One of the most striking aspects of Rickards' analysis is his emphasis on preparedness. He has outlined a series of actionable steps for individuals to safeguard their assets and navigate the turbulent times ahead. These measures, drawn from his extensive experience in high-level government roles and financial advisory positions, are designed to help Americans protect their wealth and secure their futures. Rickards stresses the importance of taking proactive measures, warning that complacency could lead to devastating losses. Central to Rickards' argument is his critique of how traditional economic indicators are often misunderstood or overlooked. For instance, he explains that while rising interest rates are commonly viewed as a lagging indicator of economic health, they can also signal deeper systemic issues. As businesses brace for a downturn, they often rush to secure lines of credit, driving up demand for funds and temporarily inflating interest rates. This, in turn, creates a misleading sense of economic activity, masking the underlying weaknesses until it's too late. According to Rickards, the Federal Reserve and Wall Street are often the last to recognize these warning signs, leaving the average citizen to bear the brunt of their delayed responses. Rickards also highlights the disconnect between stock and bond markets. While the stock market might appear optimistic, suggesting a Goldilocks scenario of a soft landing and eventual Fed rate cuts, the bond market tells a different story. The bond market, often considered a more reliable predictor of economic trends, is flashing urgent warnings of a worsening crisis. This divergence underscores the importance of looking beyond surface-level indicators to understand the true state of the economy. Adding to the complexity is the real-time perspective of everyday business owners, whom Rickards describes as the first responders to economic shifts. Unlike policymakers, the financial analysts, who often rely on delayed data, entrepreneurs, and small business owners, experience the effects of economic changes firsthand. From struggling to move inventory in the trucking industry to seeing a sharp decline in customer demand, these individuals often sound the alarm long before official recession declarations are made. As the recession looms closer, Rickards warns that the financial system could face a severe credit crunch. Banks, wary of rising credit losses, may tighten lending standards or cease issuing loans altogether, This would further choke economic activity, leading to a vicious cycle of declining growth and escalating financial instability. For the average citizen, this could mean reduced access to credit, higher borrowing costs, and increased financial strain. In addition to these economic challenges, Rickards also draws attention to the political and social dimensions of the crisis. He argues that the increasing frequency of mass layoffs, particularly in high-profile sectors like technology, has far-reaching implications. Not only does it contribute to rising unemployment and reduced consumer spending, but it also fuels social unrest. When people lose their jobs and financial security, the resulting frustration and anger often manifest in protests and riots, further destabilizing the social fabric. Rickards' warnings about the potential for violent street protests and martial law may seem extreme, but they are grounded in a sober assessment of historical patterns. Economic hardship has often been a precursor to social unrest, and the combination of financial instability and political polarization creates a volatile environment. Rickards believes that the 2024 election could be the catalyst for this perfect storm, pushing the nation into uncharted territory. For those looking to navigate these uncertain times, Rickards offers a range of strategies. His special advisory includes detailed recommendations on asset protection, investment diversification, and risk mitigation. He also provides free access to bonus reports for subscribers, offering valuable insights into how to weather the coming storm. Rickards emphasizes that preparation is key, urging individuals to act now before the situation worsens. While some may view Rickards' predictions as alarmist, his track record lends credibility to his warnings. His previous forecasts, including the 2008 financial crisis and the COVID-19 pandemic, were dismissed by many at the time, only to be proven accurate later. This history of foresight has earned him a reputation as one of the most astute observers of global economic and political trends. Looking ahead, Trump's economic strategy offers a twofold outlook. In the near term, say the next 6 to 9 months, a recession seems inevitable. This downturn will largely be a byproduct of Biden-Harris-era policies, excessive regulation, high taxes, and reckless spending. However, in the 2 to 4 year range, we can expect robust growth. Trump's approach, centered on bilateral trade deals, high tariffs, and infrastructure investments, promises to steer the US economy back on track. But here's the catch. These policies take time to show results. The economy is like an aircraft carrier. It doesn't turn on a dime. Even with immediate action, the effects won't be felt for at least a year or two. This situation is reminiscent of Ronald Reagan's presidency. When Reagan took office in 1981, the US faced the worst recession since the Great Depression. Unemployment exceeded 10%, and interest rates were sky high. But from 1983 to 1986, the economy experienced a stunning recovery, with 16% cumulative growth. The lesson here? Recessions are unavoidable, but timing matters. If Trump inherits an economic downturn, he'll need to react swiftly to set the stage for a stronger recovery by the mid-2020s. Trump's victory isn't just a win for his supporters. It's a referendum on what Americans truly value. From border security to economic stability, his policies reflect the priorities of everyday people. The Democrats, meanwhile, need to do some serious soul-searching. Blaming messaging won't cut it when the core message is fundamentally out of touch with the electorate. In conclusion, Jim Rickards' analysis paints a stark picture of the challenges facing the United States in the coming months. From the inversion of the yield curve to the ripple effects of mass layoffs, the signs of an impending recession are becoming increasingly difficult to ignore. Coupled with the political uncertainty surrounding the 2024 election, these economic warning signals suggest that the nation is on the brink of a profound crisis. However, Rickards' message is not one of despair, but of urgency. By taking proactive steps to protect their assets and prepare for the challenges ahead, individuals can navigate these turbulent times and emerge stronger on the other side. The question is, will Americans heed these warnings in time?